So really that takes me to the end of the conversation I'd like to have with you this afternoon. So really to sum it up, from a cyclical perspective, we are likely to see the economy slow a little bit in developed markets. However, the bright spot at this moment remains emerging markets, especially China, right? So with an outlook like that in mind, we just advocate in our portfolios being more selective in where we're allocating, being careful not to chase momentum, chase expensive stocks, but rather focus on stock picks, focus on the more defensive areas, and of course, pick your spots to get the exposure or the recovery in emerging markets in Asia as well. Over the longer haul, the areas that we see clear structural growth happening, and for the patient investor, like some of our strategies, we're getting exposure to technology, to some of the sub-trends we discussed, and through healthcare, which is a unique sector that has a nice blend of defensiveness and multi-generational structural kind of trends underpinning their growth.
Our key considerations that keep us optimistic for the year ahead. Philippine inflation continues to decelerate. High base effects from 2022 amid elevated interest rate environment will sustain its deceleration towards the end year. US inflation likewise to continue to accelerate, nearing to its 2% target. The visibility of the peak of interest rates show its potential peak this second half of the year. And while interest rates may be sustained on elevated levels to keep inflation within target range in the coming quarters, rate cut prospects begin to materialize in the horizon. Sustained GDP growth trajectory so far has the potential to negate slower than expected growth for 2023. And amid improving prospects, second half may have some bumps ahead, for which we recommend accumulation in tranches for support level tests. Philippine valuations are at its lowest, implying further downsides are currently limited. Charting the path forward, we recommend positions poised to take advantage in the turn in monetary policy tightening and normalization of the global investing climate.
I hope you found the outlook and the views of both Fidelity and Gab informative, and more importantly, can guide you in your investment decisions. As I listened to it, I gathered a few points, and I thought I'd highlight a few of them, hopefully to put ourselves in a more coherent strategy as well and cohesive as we move forward in your investment decisions.